Hi, good morning to everyone. I am Dr. D. Radhashri, Assistant Professor in Commerce. Today we are going to say about the financial accounting in the Bill of Exchange. Let me say about what is the Bill of Exchange. Bill of Exchange is a person, buyer and seller, both of them doing a business regarding in a trade manner when buyer selling the goods to the seller. In that regarding, he can't able to pay the amount for that product. For that purpose, the buyer giving a cash regarding in a credit basis. The seller received regarding that the bill of exchange for that money purpose. It can be explained about the bill of exchange for an example. A. A is a seller who is giving a goods and B is the buyer who is the receiving the goods. What is A doing? A is selling a particular product to a B, but B not having a amount to receive that particular goods. For that purpose, A what is doing is writing a bill of exchange. For that, it is a document. It is written by the seller. It is a detail of all the records regarding the buyer and seller, in which date the buyer is purchasing and which day the seller is selling the product. In a document, the buyer and seller will put both of the sign what the amount and what the cases in the bill of exchange is doing, in which date the amount and detail of the buyer and seller, both of the agreement basis the bill of exchange it's been signed. In that process, it can be us selling to the buyer in the way of the goods, the moving to the buyer to seller. In the document, there is a due date have been mentioned in a particular for 1 month, or it can be a 2 or 3 months. In a 3 months basis, the document is written. After that due date is when it is coming to the enter of the basis, the buyer will settle the amount to the seller and he want to receive that bill of exchange document. The process is normally going as the bill of exchange. The bill of exchange it can be say England bills or demand bills or trade bills or foreign bills, term bills and accommodations bills. It is a process of classification of a bill of exchange. In the bill of exchange, it can be take a demand process in doing a business concern. This is the process of doing a concern in a bill of exchange. Then next we have seen about the bill of exchange paper. Who can be written this paper? The customers and the buyers. The process is going in the buyers to the buyers in a bank. The bank can be entered in the bill of exchange by providing a goods to the seller. In that way, the payee and the payee is known as the drawer and the carrier of the credit of the goods. In the drawer of the bank, it can be removed in the goods can be entered into the business and the drawer to accept the paper. In the drawer bank, the both of the condition the bank is entering into the bill of exchange. If the person can't able to settle their amount in a particular date, the bank will be receive the amount. For example, the collecting of a bill in a particular basis, it can be sold to the buyer. In the process, he can be sell the goods in the process of gooding. It can be received. In the bank, what is the process he is doing? The bank. Who is the bank means the customer who is opening a bank account. In that regarding the basis, the customer is settle all the bills to the bank. In the due date, the bank will receive all the money from the particular person. In account of not receiving the bank of the money, the bank will inform to the particular person the due date is being entered, but your bill is not settled. The bank is helping to their customer regarding like this. In the way, the next is going to say about the types of the bill of exchange. Already we have discussed the based of the way to the paying and the extent to the buyers to when the shopping of the goods as a document and the entering into the business who is the selling the pays. In the way of the bill of exchanges, the three parties, the endorsement of the bill is also entering into the drawer and drawee and the payee. The three of the bills is the endorsement and the accommodation bills can be added in the way. In the process, it can be take places by selling of the goods in a particular person and particular date of the due date, he want to settle the total amount of the goods in a reasons of giving a persons can be explained in the bill of exchange as a trade manner. If without money we can able to do the business with the support of the bill of exchange. This is the process of the bill of exchange. Thank you.